Hey, this is attorney Elizabeth Potts Weinstein, and today we're going to talk about the top 6 mistakes people make when setting up their LLC. When you set up your LLC, there are a number of requirements you must do to set it up, but there's a bunch of things that you are not required to do, but it's a big mistake if you don't think about it and take action on those items. Number 1 is setting up an operating agreement for your LLC. Limited liability companies are not required to have an operating agreement, but you really should have one. So what's an operating agreement? An operating agreement is a contract that all the owners or members of the LLC have with each other. Even if it's just one person, even if you're the only owner, the only member of your LLC, you can still have an operating agreement. Yeah, it seems weird to have an agreement with yourself, but think about it not as a contract you're signing with yourself, but it's for the management of this limited liability company. There are a number of things that are going to go into any operating agreement. Some of it is very template form clauses, but some of them you're going to need to think about. So one of the first things you're going to put in there is how much money are you investing in this LLC? Think about it as if you're buying stock in a company. You could buy stock in some S&P 500 company, or you can buy membership shares of your LLC. So how much money are you putting into it? This is going to be the equity you have in your business. This matters for a number of reasons. It matters for tax purposes. It changes how things are taxed if you sell the business or just taking profits out in the meanwhile. It also shows that your LLC is adequately capitalized so it looks like a legit business. And it's very important if there's more than one owner so you can show what people are putting into it and what percentage of the business they own. Now, it doesn't have to just be cash. It could also be intellectual property like copyrights or trademarks. It could be a pre-existing business, a sole proprietorship that you're putting into the LLC. It could even be your sweat equity, the work that you're doing for the LLC. Another thing that needs to go into the operating agreement is the voting percentage for the different owners. So the owners of the LLC, the members, each get to vote on how the business is going to be run. We're talking about 2 levels of voting. Typically, there's going to be the day-to-day management of the business. Seeing clients, servicing customers, the ordinary aspects of the business. It may be that every member is going to have input on it and they can act independently. It may be that you actually vote on things, even if it's relatively informal voting, but it's still a majority rules. Then there's going to be not ordinary things. So it could be selling the LLC, bringing in new members, taking on significant debt. Those types of actions can have a different percentage. Perhaps on a day-to-day basis, each of the owners just does their own thing. But for big stuff, it has to be unanimous, or it has to be a supermajority, like 2/3 vote. You want to think about those things ahead of time because it's going to impact the day-to-day running of your business. You also can put in the roles or expectations for the various owners. So if it's just one person who owns the business, you probably wouldn't include that. But if you're having multiple members who are all going to work in the business, maybe one of them is in charge of more admin things, and one of them is in charge of sales, another one is in charge of delivering the services to the clients. You can put that in your operating agreement. You can also put an expectation of how many hours each person is going to work a week. These types of clauses are not required for your operating agreement, but they can help make things easier along the line. And the last big category of things to go in your operating agreement are the what if questions. What if one of the owners doesn't want to work on this anymore? What if one of the owners is incapacitated? What if they're sick in the hospital? What if they die? What if you guys just can't get along? There's all those types of what ifs can be addressed in the beginning in the operating agreement, so you don't have to have a big fight way down the line and have to go to court or arbitration and spend a bunch of money to get those questions answered. The second mistake people make is they don't think about whether their LLC should be managed by a manager or managed by all the members. This is something that you're going to decide before you even form the LLC, because you have to check a box which one of those you're going to be. So for example, there are some LLCs where there's only one person, and it may make sense for you, the member, to just make all the decisions and manage the LLC. If there's 2 or 3 members, you could still do that, where each member is making the decisions. Maybe you agree to big things by a majority vote. But if you have a lot of owners, if you have 3, 5, 12 owners, people who have invested in this business and aren't running on a day-to-day basis, you're probably going to want to pick someone to manage it. The manager could be one of the owners, but it could also be someone you hire to manage the LLC. This is really important to decide ahead of time, because the manager is going to be the person making the ordinary day-to-day decisions about the business and not have to go to all the members to get approval for every single day. So think about the logistics of your business and what makes sense in your situation, especially considering how many owners they are and the type of business you have and how much experience each of the members has in that type of business. Number 3 mistake people make when setting up their LLC is not filing the initial documents in addition to the formation documents. So typically you're going to file some formation documents with the state to form the LLC, but almost always there's going to be some other document that's due. It could be an initial report, it could be a statement of information. The idea is that there's some other filing that that state needs to provide more information. Typically, it's going to have the names and addresses of the managers or the members. It's going to have an updated address for the business. It may all be the exact same stuff every single year, and it may be the exact same stuff you already filed, but it's a requirement. Sometimes this has a fee, and if you are late filing that, you'll have to pay a fine. So you want to make sure that in your state where you're forming your LLC that you've done all the filings that need to be done at the beginning, not just the very first one to form it. Item number 4 is not picking the right tax status. So when you form an LLC, there's going to be some default tax status that you have with the IRS and with your state that is just automatic. If you are one owner of the LLC, it's a sole proprietorship is how it's being taxed. And if there's 2 or more owners, then it's being taxed as a partnership. You may not want that. Maybe you do, but maybe you don't. You can also choose to have the LLC be taxed as an S corporation or a C corporation. And I know that sounds weird to have an LLC taxed as a corporation, but that's just how the tax code works. So you need to look at the kind of business that you have, the kind of income and expenses that you have, the level of the income that you're going to have in the first year or 2, and the deductions that you're going to be taking to see what makes sense in your particular situation. I can't answer that question to you for every situation because the tax laws change like almost every single day. And also because it really depends upon the exact circumstances of your finances. Item number 5 is not setting up some kind of reminders for yourself about all the other stuff you need to do. So for any LLC, you're going to have some requirement to do some filings with the state every year, maybe every 2 years, to update them on any change of address, on changes of the members, that kind of stuff. You're going to probably have business license fees due every single year. You're going to have tax filings that you have to do every year. Even if it's a pass-through tax entity, you may also have to file another tax form with the state. Even if you don't have to pay taxes, you may still have to file it. So put those reminders in some calendar for yourself, in some kind of ticker, so you don't miss those filings and have to pay a big fine. Item number 6 is not planning for the end, not planning for an impasse between the members. So something that can happen if you have 2, 3, or however many owners of any LLC is you're going to disagree on a decision that needs to be made. It could be that you've never thought ahead of time of that situation happening. It could be that one of the members has changed, but there could be some kind of impasse where the LLC can't move forward. So what happens then? There are defaults in the LLC code that will have some information, but you can also put that in your operator agreement or even have a separate buy-sell agreement. You can decide ahead of time what happens. Maybe you have an outside mediator or arbitrator make the decision. Maybe you actually pick a person, you pick a lawyer who's going to help you make that decision, act as an arbitrator or mediator. Maybe you have a buy-sell agreement so the members buy out each other in case they can't move forward. But you want to look at that ahead of time because otherwise you might end up having to sell the whole business to generate enough revenue to pay everybody off, and that isn't necessarily what you want to have happen. Again, this is Elizabeth Potts Weinstein. If you found this video helpful, hit the thumbs up button, subscribe for more videos for LLCs as well as other business topics for entrepreneurs and small business owners. And feel free to leave a comment below if you have any questions about what we talked about today. Thanks a lot for watching. Bye-bye.